You're tracking the wrong credit score. Most of the time this isn't a big deal, but when you're getting ready to buy a home, credit scores come into play in multiple ways in qualifying for the loan and in determining your interest rate and your other loan costs. A single point in your credit score can mean a difference of hundreds, even thousands of dollars. So in this video, I'll explain why there's so much confusion around credit scores and why the score you're tracking isn't the one that mortgage lenders use. And I'll fill you in on two ways that you can get your mortgage credit score. One of them is free and comes with some added perks, so stick around to the end for that. And if you find this video helpful, I hope you'll click the thumbs up and subscribe. And if you have questions about anything mortgage related, please reach out. I help people finance homes in all 50 states. My contact information is in the caption, and I would love to talk. So the first thing to know about credit scores is that there's no database with your credit score in it. There's no score bobbing around invisibly over your head, recalculated all the time in real time and following you around. A score only exists when someone requests it. You or a lender or someone else, your insurance agent, somebody else who's using your credit. It's calculated in real time based on the data on your credit report at exactly that moment that the score is requested. And this can actually be kind of cool, especially if you're working on improving your credit score. If you change the data on your credit report, the next time your score is requested, it'll be different or higher if you're moving things in the right direction. In theory, you could check your score at 8 o'clock in the morning, and then maybe a credit card company reports new data to the credit bureaus at 9 o'clock in the morning, and you would have a different credit score if you applied for a loan at 10 o'clock in the morning, and that's when a creditor pulled your report. And this is actually something that I use to my clients' advantage as often as possible. My team and I are always on the lookout for ways to help our clients nudge their credit scores up. And for an example, check out this short video. It's one of my very favorite credit hacks that can move the needle in a positive direction, especially if you already have good credit scores, and particularly if you use an air miles or points card every month and charge up as much as you can. So exactly what happens at the moment when someone requests your credit score? The data on your credit report at that moment gets run through an algorithm, and that's where some of the madness, the confusion with credit scoring begins. And before I unpack that confusion, I want to give a little bit of backstory that might be helpful. So credit scoring actually originated in the 1950s when banks started using statistical models trying to predict credit risk. And the modern era of credit scoring was really the brainchild of an engineer named Earl Isaac and a mathematician named Bill Fair. And they met when they were working at Stanford Research Institute, and they founded a company called Fair, Isaac and Company, or FICO for short. I feel like there's a joke in there somewhere that I just can't find. A mathematician and an engineer walk into a bar, something, credit scores. But anyway, they introduced the now ubiquitous, of course, FICO score in 1989. And most everybody knows that there are three national credit bureaus, Equifax, Experian, and TransUnion. I don't meet too many people who don't know that. But the sheer number of credit score models is something that I think most people don't know. Equifax and Experian each have 16 different FICO score models. TransUnion has 21. And then the credit bureaus, trying to probably break the kind of monopoly that FICO, Fair Isaac and Company, has on credit scoring, further muddied the waters by rolling out their own credit score model called Vantage Score. And it's got 4 formulas that can be applied to the data at each of the 3 credit bureaus, which adds another dozen scores to the mix. So believe it or not, you have at least 65 credit scores. And each one of these credit scores applies a slightly different formula to the information on your credit report to come up with a score. Some of them are general purpose, and some of them are industry specific for car loans or for credit cards or for mortgages. And to make things even messier, different models rate your score on different scales. So it's kind of bananas and really hard to keep it all straight. I think it's easiest to keep kind of use this analogy. Think of the data on your credit report as the raw material, the ingredients for a recipe. You could use, for example, eggs and flour and butter and salt in a bunch of different recipes to get a bunch of different results. And it's just the same with credit scoring. You can take that same raw data and run it through a different algorithm and get a different score. So when you track your credit score on Credit Karma or NerdWallet or Capital One or whatever your credit card is, you'll generally see the score that they're going to give you is going to be a Vantage Score 3. And my best guess is that the reason these services are offering Vantage Score is that it is the model that's owned by the credit bureaus, and it's probably cheaper or even free for them to offer to you. But right now, Vantage Score isn't used in mortgage lending. Mortgage lenders only use FICO scores. And we use not just any FICO score, but an antique FICO score. Now, just like Apple, FICO releases new versions of its flagship product periodically. And also just like Apple, they number each release. Right now, they're up to FICO version 10. But in mortgage lending, we use, with the Experian Credit Bureau, FICO 2. With Equifax, we use FICO 5. And with TransUnion, we use FICO 4. And I have some theories as to why mortgage lenders haven't upgraded to the latest and greatest credit score model, the one with the fancier camera. In part, it's just that changes of any kind, change period, doesn't happen quickly in mortgage lending. Fannie Mae, Freddie Mac, FHA, VA, USDA, these places where mortgages come from are all government entities, and big government-run, highly regulated wheels turn really slowly. But the more legitimate issue behind this lag in updating the credit scoring model is just data integrity. The point of using credit scores in lending is, of course, to predict how likely it is that a loan's going to perform. Freddie Mac brought credit scoring to mortgage lending in 1995, and since then, hundreds of millions of mortgage applications have been processed using these current credit score models, and they proved to be really good predictors of how a loan's going to perform. Switching over to a new model means, at least to some extent, they're going to be starting over and rolling the dice when it comes to how well a newer model is going to correspond to mortgage performance and predict mortgage outcomes. So how do you wade through all of this credit score chaos and figure out what your mortgage score is? Well, there are really two options. One of them's free and the other one isn't. I'll start with the not free option, and that's to sign up for credit monitoring at the source, directly with Fair Isaac Corporation. Their website is myfico.com, and they offer a free plan, but that's not the one you want. For free, you're only going to get FICO 8 and only from the Equifax Credit Bureau. So to see your mortgage score, you're going to have to pony up some cash. You've got to pay them. And when you sign up, make sure you sign up for a plan, if you go this route, that shows scores from all three credit bureaus. Mortgage lenders are going to pull all three credit bureaus, so you should too. They offer a couple of tiers, and the more expensive ones are just going to refresh your credit score more often. Now, once you sign up, you're going to be taken to a home page that looks like this. It'll have all three credit scores on it. But look closer and you'll see that you're looking at FICO 8, and that's not the score that we care about for mortgages. So scrolling down, you'll see links for score versions by loan type. And of course, mortgage is where you're going to want to go. But before we click over to mortgage scores, you're looking at my credit scores, by the way. So these are my FICO 8 scores. Make a note of what they are. They're 827 with Equifax, 816 with TransUnion, and 805 with Experian. So let's check the mortgage scores. And what are they? They're 799, 819, and 798. Equifax is 28 points lower for the mortgage score than it was for that FICO 8 score. TransUnion is 3 points higher. Experian is 7 points lower. When you apply for a mortgage, your lender is going to use the middle of these three scores wherever your credit score comes into play. We actually call this your indicative credit score. So my score right now today, if I applied for a mortgage, would be 799. Although I should add, if I applied for a mortgage with somebody else, with other people, my lender would use the lowest middle credit score for me and any other person that I applied with. Now, I hope watching this video is going to save you from a small but very, very common anxiety attack that a lot of people I talk to at the outset of the mortgage process have. When you initiate a mortgage loan, that's almost always going to be done online these days. You're going to click a link, you're going to fill in a form, you're going to authorize a credit check, and you're going to hit submit. And the next thing you know, you're looking at credit scores that are at least a little and maybe quite a bit lower than you're used to seeing. So it's really natural to have an adrenaline rush and think the worst. What terrible thing has befallen your credit with the worst possible timing right as you're getting ready to apply for a mortgage? Why is your score so much lower? And the short answer is nothing bad has happened. Mortgage scores are almost always between 5 and 30 points lower than the score that you've been tracking for free. Remember, it's just apples and oranges, or maybe oranges and grapefruits. We're taking all that data in the credit bureaus are holding and just running it through a different formula on a different scale that's going to come up with a different number. So you don't have to worry when you see something that's just a little lower. Now, if you're not in love with the idea of paying the people at Fair Isaac for your mortgage scores, but you still want to know what they are, there is another option, and you're looking at her. Just reach out to a lender. We'll happily pull all 3 mortgage credit scores for you at no charge. And unless you've already signed a contract to purchase a home, my team and I always start with what's called a soft credit check. This is a credit check that's for information only, and it has no negative impact on your credit score. I put a link above that you can click if you want to get started and fill in a form and see what those mortgage scores are. And if you're hesitant to do that and to start a conversation with a lender because you're not ready to go shop for a home today or super soon, push that idea aside. I really wish I could talk to every client 3 or 6 or 12 or even 24 months ahead of when you start your house hunt. There is so much good that can come from starting conversations about your financing early, especially when it comes to optimizing your credit score. Once we have a mortgage credit report pulled up, we can run credit score simulators, and they are truly one of my favorite toys. They let us play around with different scenarios, run different what-if iterations, and project what your credit score will be up to 2 years into the future. And the output that we get from these tools makes managing your credit score kind of a simple paint by numbers process. You know exactly what to do and exactly what your score is likely to be in the time frame that you're planning on purchasing a home. Mix in a conversation about your bigger picture goals for your home purchase, and you'll have a step-by-step roadmap that you can follow from today until whatever day it is that you're ready to start the hunt for your new home. So imagine how great that'll feel, and pick up the phone and call me. My contact information is in the caption below. I really look forward to talking, and thanks so much for watching.